7.6 Cost of goods sold statement. In this we are going to discuss about cost of goods sold statement. It has 5 sections. One by one we will discuss. Direct material section. Direct material or the raw material. As we have already discussed about the direct material is the raw material and component parts that become an integral part of finished goods such as wood to make table. It is directly associated with the product, right? Okay, how it's calculate? Direct material consumed is equal to beginning inventory plus purchases and then minus ending inventory. Mean if you have direct material at beginning and then you purchase, then you less the ending stock. So what you will get? Direct material consumed, right? Second section is direct labor. Direct labor, we know that the direct labor is easily traceable and it is directly associated with the product, and direct labor is the cost of direct worker who work directly on the goods being manufactured either by hand or with machine. Factors that determine the direct labor cost are number of employees, number of days per month, number of hours per day, and rate per hour. These all are the factors that determine the direct labor cost. How it's calculated, we will discuss in the another session. Factory overhead section. Factory overhead are all the manufacturing cost other than direct material and direct labor. Factory overhead is equal to indirect material, indirect labor plus other indirect cost. Now we are going to discuss here factory overhead cost. Factory overhead cost all the indirect material, indirect labor and other indirect cost. TMC is the total manufacturing cost. How it's calculated? The direct material consumed, what the direct material is consumed, what the direct labor and the factory overhead. Combination of these three costs is the total manufacturing cost. Now the fourth section is the work in process section. Work in process include all goods that are semi-finished and are still in process. Cost of goods manufactured. How we calculate cost of goods manufactured? Beginning inventory plus total manufacturing cost minus ending work in process. Finished goods section are the final product manufactured and now waiting to be sold. How it's calculated? Cost of goods sold is equal to beginning finished goods inventory plus cost of goods manufactured and then minus finished good at end. Now we will see in a template how it's prepared. In beginning inventory, first we will calculate the material cost. Beginning inventory, direct material. Purchase of raw material, as we discussed, add transportation cost, less return and discounts, when what we got? Net purchases. Cost of material available for use, add beginning plus net purchases is equal to cost of material available for use. Now we deduct ending inventory, direct material at end. So now we have direct material consumed. After deducting ending inventory, what we got? We got direct material consumed. Direct labor, as we have direct labor, FOH we discussed before, we will add together. What we got? We got total manufacturing cost. Total manufacturing cost is the cost that is required to manufacture the product. So we will add WIP beginning and we will deduct WIP ending. So what we will get? We get cost of goods manufactured, what we manufactured. Add beginning inventory finished goods and less ending inventory finished goods. Now what we will get? The cost of goods sold, right? So this is the statement of cost of goods sold. Now this is the income statement, right? Income statement. How to prepare the income statement? Sales, if we have sales, less return and discounts, net sale. After deducting cost of goods sold, which you have already calculated from the previous section, cost of goods sold, then we got gross profit. After deducting this other income, we will add other income and then less operating expenses. So what we will get? We get net income. Okay, what is the prime cost? Prime cost is a primary cost without which a product cannot be made. Formula for calculating the prime cost is the direct material consumed plus direct labor cost. As we know about the conversion cost, these are the terms which we will use frequently in this cost accounting and management accounting. So what to need to consider that what is actually the prime cost and the conversion cost. As we discussed, prime cost is the primary cost without which a product cannot be made. And what about the conversion cost? It is the cost of converting direct material into finished goods. And the formula to calculate conversion cost is as follows: direct labor and factory overhead. Direct labor and factory overhead. Right? Okay, next is TMC, total manufacturing cost. It is already, I have told you, the manufacturing cost or the total manufacturing cost is the same. It's the sum of all the first three sections of the cost of goods sold statement. And the formula to calculate total manufacturing cost is as follows: TMC is equal to direct material consumed plus direct labor cost plus factory overhead. Moreover, based on the above data, we can also calculate total manufacturing cost as follows. How? Prime cost plus factory overhead. Prime cost is the material and labor, and then we add factory overhead. So what we got? We got total manufacturing cost. And the way to get the total manufacturing cost is direct material consumed plus conversion cost. And conversion cost again is the direct labor and overhead. Right? So what we have seen in this section, there are 5 components. One is material, labor, overhead, work in process section, finished goods section, right? And then we prepare the statement, and then we prepare the income statement, right? And then we classify the cost as a prime and conversion, and then last we calculate the manufacturing cost and the different approach to calculate the different way to approach the manufacturing cost. Thank you.